Welcome to the Prime Property Finance Podcast with Gareth Morgan and Mark Watts. This unique podcast will dive deep into all areas of property investing finance, going behind the scenes with property professionals, investors and clients. Between us, we have 35 plus years experience in property finance. The podcast has been launched to share knowledge, mindset requirements and experiences of successful investors and professionals. We aim to simplify many of the complicated areas of finance and investing and provide valuable and easy to implement tips. Keep an eye out for our new longer episodes every Tuesday and our shorter ones every Friday.
Hello and welcome to this week's episode of the Prime Property Finance Podcast. My name is Mark, and in today's episode I'd like to talk more about supported living as an investment strategy in property. Why do I want to talk about that? Well, we have an increasing conversations around investors looking at this as a viable way to maximize their properties. And I thought it's wise to pick up on this as a topic. We've done a lot more on this in previous episodes. In fact, we've had a guest on in one of our early episodes who specializes in this. And if you're interested in this as a strategy, then go check that out, that podcast. We do a really good deep dive into the strategy, its pros and cons and everything like that. But I just wanted to bring it back to everybody's attention, really, in terms of it as being a viable investment strategy, and also share some of the changes that we are seeing in the lending space that further supports some of the lenders' appetite around this. So if that sounds like something that you're interested in, then please stick around. We'll keep this relatively brief. This is quite a short episode, so we'll keep it high level. And as I say, if you want to go into more detail, then check out some of our early episodes on that as well. Okay, so supported living. You may have heard of this. It's something that I see on social media quite a lot. It's certainly something that's been spoken about in the investor communities out there. So what is it that we're actually talking about? So supported living has become one of those phrases you hear a lot in property at the moment. Decent rents, long-term tenants, strong demand. It sounds like the perfect investment. But like most things in property, there's what it sounds like, and then there's what it actually is. So today we're going to break down the supported living, what it is, how it works, and whether it's actually a good strategy or just another buzzword, really, on that front. But I've alluded to it a bit. We're certainly seeing a lot more of this. So supported living is, as the name suggests, so it's backed by as a housing association. And it is, it's not necessarily housing like a care provision in that sense. It is a supported living. So it's going from those that are homeless to an accommodation that is meant to be seen as sort of an interim step accommodation, with the support being to get you back on your feet to then subsequently move you into a more permanent accommodation. Okay, so it's that level of care that we're talking about. So there will be no domiciliary care. There will be nobody staying in the property overnight. That is a totally different proposition. There'll be nobody under the age of 18. That is, again, very, very different. That is a children's care model, not related to this one. This will be people who are coming from homeless status. They may be ex-prison or ex-offenders. They may be asylum seekers. We have domestic abuse may use these as temporary shelter whilst they are looking to get themselves back on their feet. So that's the sort of thing, tenant that you can expect to see there. You will have a registered provider that will act as the main provider of the service, and then you have a care provider as well that sits within that. Okay, so that's what we're looking at. You will be dealing with either the care provider or the registered provider. Those are two different things. Again, we can do a deep dive, or we've done a deep dive into what it is all about in previous episodes. So with that in mind, what is it that you're actually doing? Well, you're acting as the landlord, okay? You are not acting as the care provider in any way, shape or form. You are literally, I say donating, you're clearly not donating, but you are making your property available for them to occupy, and then there's a relevant lease that's going to be in place. Now, notice that I said the word lease as opposed to AST. This is a solution that you would let on commercial terms to a the housing associate, the supported living provider. Okay, so just bear that in mind. So that's where it differs significantly from an AST or an occupational contract here in Wales. Now, with that changes the regulatory requirements, because you are no longer no longer leasing to the end user, who would then occupy it under an AST or an occupational contract. You are letting it to a legal entity. Therefore, this becomes a lease, and a commercial lease at that. It doesn't mean that you can then run off and get a commercial investment on your property. It doesn't work like that, but the conditions of the arrangement are going to fall within the bounds of commercial lease. So what are the pros and cons to it? Now, a lot of people are moving towards this space, as I alluded to, because of the regulatory changes that are happening when dealing with the end user on a standard tenancy basis. Now, people are becoming less confident in dealing with tenants, and are therefore moving across and finding ways in which they can still retain the asset, retain the property, but subsequently take away some of the regulatory issues that surround that. Now, what they will then do is let this out on a commercial lease basis, and that means then that it's technically a hands-off relationship. So it's a bit of work to be done at the front end. These leases tend to be 3 to 5 years long, and once they're all signed and delivered, the upkeep of the property is the responsibility of the occupant, the tenant that's looking after the building. You may look after the external of the building, but the internals, any damage and whatnot, gets picked up and repaired. So it's a full, an FRI lease, they call it, so a full repair and insurable lease. And that means that the tenant then is responsible for the property as well. So that means there's no voids, no void periods. You get your rent on a monthly basis. You have no telephone calls from the tenant or anything of that nature. So you can start to see why this is becoming more and more attractive. Are the yields higher? Possibly, when you take into consideration the absence of voids. So if you consider, so the rents themselves aren't exactly higher per se. However, when you take away the operating costs, the maintenance, the risk of any voids and so on, then this can become quite attractive again, despite the actual rent being linked to local housing authority rent rates. And that can then make it more attractive because, as I say, it is a hands-off. It may be a lower yield. However, if you've got no expenses to deduct from that yield, then that could be far more attractive than if you let it to the end user. So it's becoming more acceptable in that sense. As a result, we are seeing more and more lenders come into this space, and we have had some lenders that have just revised their criteria as to what they would accept. So I'll take Shawbrook Bank, for example. They would operate in this space, but they were quite clear on certain things that they wouldn't do. They would do a fair amount, but there were certain things that they wouldn't get involved in. So they've changed that. So I thought it's just useful just to run through actually some of these points that we're seeing here. So they can now accept applications where the leases with Serco, Mears or Clear Springs. Historically, up until this month, that was not a thing. So as soon as somebody told us Serco, Mears, Clear Springs, Shawbrook are ruled out, but they will now consider those applications. They can now use an AVM. So what is an AVM? It's an automated valuation model. It means you don't need a physical inspection of the property. Now, the property has to meet certain criteria to do it, but it's interesting that they will use AVMs to value the asset on that. The solicitors, they've made the process easier in terms of the solicitor part, so you can have dual representation effectively with them. Okay, so that's something to bear in mind. That can make the process a little slicker for you as well. They used to have 14 points on their leases that had to be satisfied, and now they've dropped that down by 50%. There's now only 7 points. So we have a document which is to help us tell us what's acceptable in a tenancy. That had 14 bullet points on it, and it got quite granular in its detail. That's been watered down now to just 7. So you can see now the appetite is relaxing a little in this space. Supported housing applicants eligible for SB2 products. So what that means is that's their preferential pricing. So they've got all these weird and wonderful codes for products. So what that means is it can sit on their more preferential pricing, whereas it didn't before. It can have up to 10 tenants if it's a HMO, or up to 10 units if it's a multi-unit freehold block. Again, that is better than it was before. They will assess it on its AST income used for the affordability. Now, there is a difference sometimes between what the LHA rate is and what the AST income rate is. So that could play in your favor from an affordability perspective. And they will accept both C3 and C4 use classes. Okay, so that is standard residential or HMO use classes. They will not do it against care homes and hotels. As I mentioned, those are different models altogether. And if there is any form of regulated care, or if they're under the age of 18, that excludes Shawbrook. So again, speaks to what this space is all about. So as I say, in terms of supported living, it's becoming more and more common. We're having a lot more conversations about it. More lenders are coming to the marketplace. So if you are sitting there thinking, what am I going to do? I've had enough of buy-to-let. This isn't for me. I want to exit this space. Then I would encourage you, before you make that decision, and it may still be the right decision to make, is that have a look at alternative strategies. Check out supported living. As I say, there's loads of resource online. Speak to your local authority. They will be able to signpost you to some of the providers as well. Make sure you do your due diligence, because I've seen these firms go bust in the past, albeit it's rare. So, not everything is equal in that sense. So just make sure you do your homework. But it's certainly a strategy that's worth considering. And one, as I say, that more and more lenders are coming into the foreground with it as well. So if you have any questions around supported living at all, then just drop us a line in terms of the finance. We'd be more than happy to help. And I hope you found this episode useful. So thank you very much for listening. Take care.
Thank you so much for listening to our podcast. We hope you have learned something and have some tips to take away. We'd be very grateful if you enjoyed the show. You could give us a review and share with anyone that you know that may be interested. And of course, subscribe to the show so you can get notified when a new episode is released. If you'd like us to answer any questions or go deeper on a specific topic, please drop us a message at primeproperty.finance. See you on the next episode.